confident but cautious. That's how the European Central Bank's president described its approach as he announced the end of quantitative easing.
While incoming information has been weaker than expected, reflecting softer external demand, but also some country and sector-specific factors, the underlying strength of domestic demand continues to underpin the euro area expansion and gradually rise in inflation pressures.
The move shows the continent's economy is gaining strength. At the program's peak, the ECB was buying up to $34 billion worth of bonds from banks. $2.9 trillion was pumped into the Eurozone economy over the past 4 years. According to experts, this added 0.75% to growth, which averaged 2.25% between 2015 and 2017. But the ECB has slashed the growth targets for this year to 1.9% from 2%, and for next year to 1.6% from 1.7%. And there are growing crises that could derail the recovery. There's the threat of a hard Brexit, as UK Prime Minister Theresa May struggles to find support for her divorce deal with the bloc. Another flashpoint could be Italy. Brussels is blocking Rome's big spending plans, sapping consumer confidence.
I hope the budget law will be approved and that the EU understands the problem we have. I hope that Matteo Salvini and our Prime Minister Giuseppe Conte manage to do something good for Italy.
In France, riots have forced Emmanuel Macron's government to cut spending, and businesses are losing money.
On Saturday, we only had $238 of sales. We had hoped to do around 11,000. Saturdays around Christmas time are usually a good period for us, so it's a net loss.
The ECB held its benchmark interest rate at 0, keeping credit cheap for businesses and households. Analysts say borrowing costs will have to go up soon to keep inflation from getting out of hand. Before that happens, authorities will need the European economy to be more stable. Paolo Montecillo, TRT World.
And Claus Vistesen is the chief Eurozone economist at Pantheon Macroeconomics. He joins us live now from Newcastle upon Tyne in the UK. Good to have you back on the program. So Mario Draghi's announcement comes at a time when growth or recovery across the Eurozone is slowing down. Is now the right time to stop the stimulus?
Well, that's a really good question. I mean, I think it is insofar as goes, you can argue that that the ECB is ending QE, but then it's striking a deal with markets on the other hand to basically keep rates very low for a very long time. So that should be enough to prevent the economy from falling off a cliff. But as your colleague said in his introduction, growth is slowing and probably also slowing faster than the ECB expects. So it's a little bit tricky for the ECB at the moment, but I think they'll probably get away with the end of QE. I think markets have been well prepared for it.
Mario Draghi also argues that over the course of the 4 years of QE, that his program was largely responsible for the growth that we saw in the Eurozone. Has it been a success, as he would like to believe?
I think he might have misspoke a little bit there. I mean, I don't think you can attribute that much to QE, but I think it's been a success. I think you go back to 2012 and Draghi's commitment to do whatever it takes to save the euro. The QE has been part of that. It's been a journey, and we have a lot to thank Mr. Draghi for in the Eurozone insofar as goes as keeping it together in an environment where the political environment has been very volatile. So I think to that extent, yes, but to this comment that it's been responsible for most of the growth, I'm not so sure about that, to be honest.
And we all know that the program has many high-profile critics, including Germany, who argued that it was a disincentive for Eurozone economies such as Italy, France and Greece to reform their economies. Lenders said that the bond-buying program affected their bottom lines. There's also an argument that it impacted capital markets by distorting them. Do you share any of those criticisms?
Well, QE is not a perfect tool, but it did come in at a time when yields in the Eurozone were threatening again to increase. And in that sense, I think it was very important to compress yields in the weaker bond markets. But it's not a perfect tool, and certainly, you know, I think insofar as goes that it's helped to keep interest rates low as well on the long end. That's probably not helped banks, but insofar as goes central banks, that's almost the only thing they can do. And QE, I will say QE on net has been a benefit because it's reduced the downside risk in the Eurozone, which at the time, going back to 2012, 2013, were very, very high. So in that sense, I think it's been a success.
Okay, and I'm sure much more will be written about the effectiveness of the last 4 years. Claus Vistesen in the UK, thank you again.